Welcome to the Riskwiser Zone, the podcast where we dive into the world of stocks, finance, and risk management. I'm your host, Lewis, and we're glad you're joining us today. As we navigate the ever-changing landscape of the financial markets, it's essential to stay informed and up to date on the latest developments. In our opening segment, we're taking a closer look at retail giant Walmart, which recently reported its second quarter earnings. The results missed Wall Street estimates, sending the company's shares sliding 4.5% to 97.93. This decline had a ripple effect on the broader market, with the S&P 500 index falling 0.4% to 6,307.7. Walmart's miss was attributed to one-off events, including settling lawsuits and reorganization costs. While these may be unexpected expenses, some investors might have been caught off guard by the lack of warning. The company did raise its financial guidance, however, citing that the impact of tariffs has been gradual enough that customer behavioral adjustments have been somewhat muted. It's worth noting that Walmart is not alone in facing challenges. The retail sector as a whole is experiencing a slowdown, with other major players like Costco Wholesale, Dollar General, and Target also feeling the effects. Additionally, economic worries, including slowed job growth and conflicting signals about inflation, are contributing to market unease. As we examine this story, it's essential to consider multiple perspectives and avoid making any knee-jerk reactions. We'll continue to monitor Walmart's performance and the broader retail sector, providing you with balanced analysis and insights to help you make informed decisions. We'll be right back with more from the world of stocks and finance on the Riskwiser Zone. Welcome back to the Riskwiser Zone. We're glad you're still with us as we dive into the latest developments in the world of finance and economics. Today we've been exploring some of the key trends and stories that are shaping the global landscape, and now it's time to take a closer look at what's happening with interest rates. As you may have heard, Federal Reserve Chair Jerome Powell recently gave a speech at the annual conference hosted by the Reserve Bank of Kansas City in Jackson, Wyoming. And let me tell you, his words had a significant impact on the markets. Powell sent his strongest signal yet that the central bank is preparing to soon restart interest rate cuts, highlighting the labor market's vulnerabilities even as inflation accelerates. Now, it's worth noting that Powell didn't explicitly endorse a reduction in borrowing costs at the Fed's next meeting in September, but his emphasis on the prospects of a weakening economic backdrop made it clear that a cut is likely next month. He pointed to the recent slowdown in monthly jobs growth and questioned whether it was a function of a pullback in demand from companies or a reduction in the supply of workers resulting from President Donald Trump's immigration crackdown. Powell also stressed that inflation was still too high, but he sought to push back on concerns that Trump's tariffs would lead to a persistent rise in price pressures. Instead, he said that a reasonable base case is that the effects will be relatively short-lived, a one-time shift in the price level. However, he acknowledged that the Fed was in a challenging situation, given that the central bank's two goals of low, stable inflation and a healthy labor market are now in tension with one another. The market certainly took notice of Powell's words, with Ether surging 15% to a new record high after his speech. And it's not just the cryptocurrency markets that are reacting. Stocks and bonds are also being affected by the prospect of lower interest rates. As we consider the implications of Powell's speech, it's essential to remember that the Fed's decision-making process is complex and influenced by a wide range of factors. While a rate cut may be on the horizon, it's crucial to keep in mind that the central bank's primary goal is to promote maximum employment and price stability. We'll continue to monitor the situation and provide updates as more information becomes available. In the meantime, it's essential for investors and businesses to stay informed and adapt to the changing economic landscape. Stay tuned for our final story of the day, right here on the Riskwiser Zone. Welcome back to the Riskwiser Zone. As we wrap up today's show, I'd like to shift our focus to some exciting developments in the world of finance. We've got two interesting stories that caught my attention, and I think you'll find them quite intriguing. First off, let's talk about the recent trend in initial public offerings, or IPOs. According to a report by Reuters, companies are gearing up for a slew of high-profile listings, with some big names set to hit the market soon. This surge in IPO activity has sparked a lively debate among investors and analysts alike, with some predicting a potential mispricing risk. One such example is Tata Capital, which is preparing for a $2 billion IPO ahead of the Reserve Bank of India's September 30 listing deadline. The company's unlisted shares have recently declined by over 8% in just 1 month, trading around Rs 795 in the unlisted market. This raises questions about the timing and valuation of the offering. On the other hand, we've seen some impressive earnings momentum from Tata Capital, with consolidated net profit more than doubling in the June quarter. The company's financials look robust, and it's likely to be one of the largest financial listings in India's history. Now, as investors, it's essential to approach these developments with a critical eye. While IPOs can offer exciting opportunities for growth, they also come with inherent risks. It's crucial to carefully evaluate the company's fundamentals, management team, and market conditions before making any investment decisions. In conclusion, the world of finance is always evolving, and it's our job as investors to stay informed and adapt to changing circumstances. Whether you're a seasoned pro or just starting out, it's essential to remain vigilant and make informed decisions based on your own risk tolerance and financial goals. That's all for today's Riskwiser Zone. Remember to like, share, and subscribe, and until next time, invest with caution.